The most anticipated earnings releases for the week of January 20th, 2025. Presented by earningswhispers. There are 150 companies with analyst coverage set to report as earnings season picks up. 90 of them are financials, including more than 50 regional banks. This doesn't include BOK Financial, which previously said they were going to report on Monday, despite the market being closed to honor Martin Luther King Jr., but they reported after the close on Friday. So we really begin the week on Tuesday, and while there are some key names that morning, the focus will be after the close with Netflix and United Airlines. For Netflix, the company will push the narrative of increased engagement, which is sure to be positive following the Tyson-Paul fight and the Christmas Day NFL games, or as some call it, the Beyoncé concert. Yet, we are going to want to know how that translated into new subscriptions and churn. At the same time, we'll get United Airlines results. You know, the airlines are so hot right now. The focus on Wednesday will come early, starting with P&G. The staples have been among the worst performers during the quarter, but P&G has held up a little better. It isn't as much that things are bad, but more like just a lull with pricing pressures, weakening demand from their core consumer. And then there is the GLP-1 impact. If there is a positive, it is that sentiment has dropped significantly for the group and remains low for P&G to the point where the stock has typically performed better than average in the coming quarter. Abbott is a completely different company in a completely different industry, but as Yogi Berra might say, the differences between the two are similar. Once again, on Thursday, the focus will come early, but in this case, it is two companies that investors really like. Of course, stocks top when they run out of buyers, so high sentiment is always a risk. But earnings momentum names, by definition, have bullish sentiment because it takes bulls to buy stocks. Therefore, GE Aerospace has essentially flatlined since May despite continued positive trends in earnings. Expectations aren't for the company to blow out numbers, but the trend is expected to continue. And then there is American Airlines. You know, the airlines are so hot right now. Earnings season means a full schedule of earnings releases on Fridays, and this week that list will be topped by Verizon. If you buy into the dogs of the Dow theory, Verizon is the biggest dog. On the other hand, it still has fleas. Meanwhile, American Express has broken to new highs ahead of an expected earnings beat, which isn't typically bearish. For the first full week of earnings season, less the holiday, volatility is rather muted, but with some minor exceptions. Marine Max has the largest spread between the implied move and the average move. There is a tightening consumer, especially among large ticket items, and high interest rates remain a headwind with the potential of new tariff headwinds. So it's probably not a great quarter, but surprisingly, investor sentiment has held up. Looking out over the next 5 weeks, we have over 1,100 companies that have officially scheduled their earnings release, but Amazon isn't one of them. They should tell us any day now because they don't usually wait this long to schedule earnings.
Shh.